Hey, how is it going, traders? Welcome to another video. This one is going to be about how to pass a prop firm evaluation on a backtesting session within the funded account parameters. So we will be using the top step account as an example. So here we have the 50K account, which is like $49 per month. Profit target is 3,000. And we can trade maximum position size of 5 contracts and maximum loss limit is 2,000. And the consistency rule is 50%, which we will be following with our protocol. For this example sake, let's say we have 50% win rate and we can expect a 5 consecutive losses because every trading model incurred losses and we would expect 5 consecutive losses. Why is that? I will explain it to you. The risk approach will be dividing the drawdowns by the number of trades you are getting per month. So for example, if you are getting 10 trades per month, so we can divide the whole drawdown, which is $2,000 by 10 trades, which can give us that $200 risk per trade. And using 2-to-1 risk to reward ratio, we are getting $400 per winner and we are getting minus $200 per loser. If I hit 5 consecutive losses, that would be $1,000 drawdown, so I can still manage that. And there is the protocol I will be using, dividing the whole drawdown. You can do that for the 100K or 150K account, but the 50K is the sweet spot. So we will be using these parameters using the prop firm evaluation within the backtesting session, and I will show you how to pass an account, and we will incur losses and winners, how to manage in equity. So I will show you that in the backtesting session. So now hopping into the trade setup or the backtesting. So here I am on the trade setup backtesting session. We will create a session. So this is the session name, passing a funded account, like every Joe method. I will be not using some advanced stuff. The regular T-Trades fractal model and my model rules, 11 TTFM mod, which I share with you guys in the last backtesting session. And the symbol would be the micro Nasdaq and micro S&P 500 because we will be using less size and we can manage our trades and scale out of the position. So we will be using the micro, and the account balance will be $2,000 because the prop firm is giving you $50,000 leverage, but the actual drawdown is $2,000. So we will use that, and we will start with the recent months like the 2025 and June, I would say, and Monday, which is 2nd June, and the end will be the current price action, like the Monday from the previous week. So this is our backtesting session. I will create that and I will meet you guys in a second. I'm gonna arrange this stuff. So now I have arranged the charts and everything. So here we are on the MNQ and MEA steady chart. So the previous week kind of closed bearishly. Thursday we took the highs and we closed bearish, but on Friday we kind of reacted bullish. And if we are respecting the 50% of the previous candle's range, then we can seek continuation entry higher. And if we are invalidating our buys, then we can seek lower entries. So that is our idea. So dropping down to the 1 hour chart now and bringing the daily indicators on. So on the right side, you can see the previous day kind of created that reversal, change in the state of delivery, and the new day is opening, creating kind of the low because we don't have an established high to trade away from. And the ideal situation will be like New York reversal and then expansion higher to this previous day high or more. So skipping it into the New York session, which is the 9 a.m. And here we go. So now we have a London reversal, consecutive series of candles followed by a quarter above, and we will seek the New York continuation. Since we are expanding higher, we need the 930 to give us a retracement opportunity to get inside with the distribution to the previous day high. So that is the idea. We're trading away from an established low. If we go to the forward chart, we have a 2M reversal, 6M expansion, and skipping it into the New York session open. Now this is the equities open. Now we will see how it reacts. Do we have a swing point in the market? No, we don't have. On the 30-minute, we have kind of failure swing, no swing point to trade away from. So we will skip the equities open. And the equities open straight, expanded to the previous day high and hit our objective within the 30-minute or something. Okay, we go to 3-minute, it expanded away without providing us an opportunity. So we have reached the previous day high, round liquidity is reached. We are creating SMT divergence with the yes. So now we will see what the 10M is doing. The 10M is kind of creating its low and consolidating. Can we get an entry to this high again on the yes or something? So we will bring the 30-minute indicator on the right side. We have a change in the state of delivery within the candle 2. Can we get a continuation or block entry? What the hell just happened? So we have a change in the state of delivery within the 10M candle. We created its low from a swing point on the 30-minute chart. And now we are going higher. Can we get a continuation or block entry to this high on the yes or NQ? So we will see that. Now the 1030 is open. It kind of took this short-term low. Can we close above that candle? We're consolidating in between the range. And now we have closed above the consecutive series of candles after taking that short-term low. But this is kind of a failure swing for me because we don't have a SMT at the lows. So we will seek entry within the next candle. If it is reacting up the previous candle high, then our bias is invalidated. And if it is going higher or creating the next candle's low, then we can trade towards that high. So see that. And the price is just chopping around because we have consumed too much of the daily range, expansion, and we will skip it to next day's New Year session. Now starting again with the daily chart. What do we have here? We have Friday's low, Monday expansion, and Tuesday has already created its low and it's now want to go higher. So the previous day high is our short-term objective. Dropping down to the 4-hour chart, what do we have? 2M reversal, same London reversal, and 6M expansion higher. And if you go to the 1-hour chart and bring the daily indicators on, what do we have? From the daily open, we went lower, we had a London reversal, and now we are seeking New York continuation. So waiting for the 930 to give us that continuation entry, kind of a retracement or something, then we can get inside with the distribution higher. So skipping it into the New York's open. 930 expanded higher above the highs, which is not something we wanted. But anyhow, since the daily candle has a range up, since the daily candle has 197 point upper range and the previous candle were like 400 point, we can still seek some expansion if we get, or if we are reversing out this high, then our price is invalidated. So waiting for the next candle open. $9.48. If we go to the 5-minute chart, do we have a swing point on the hourly? Do we have a SMT divergence? Yes, we have. We don't have an SMT, but we do have a swing point here. If we go to the 3-minute chart, we have a change in the state of delivery right there, but that was around 9:30, so I'm not trading that window. If we are getting some continuation entry within that 400 or 300 point average daily range, then we can trade that. So waiting for the continuation order block. The 10th AM is ahead. And now this is now 9:57, and we have created a continuation order block within the current candle. So we will remove the drawings. We will bring the 3-minute indicator on. So actually we have like a candle 2 closure within the 9:30 candle. We're taking the previous candle below. A change in the state of delivery again. And now we retraced into this fair value gap. And we have a continuation order block. So this can be trusted because we have still average daily range to trade. So now I'll enter the next candle, putting my stop loss above the 50% up, below the 50% of this wick or something. Like 40 points, which is too much, but and targeting strictly 2R. So I'm gonna enter this position with a 3 contracts that would be $244 risk. I'm okay with that. So entering right here, and so I mistakenly was watching the MNQ on the right side. Now I have put in the ES chart, and we have still the same idea. The NQ is a bit stronger and cleaner if you see it, because it is giving us that continuation order blocks, and the ES is kind of dragging behind. So if I lose this trade, this will be one of the loser within the 50% win rate. I don't care about the outcome. And if I win this, this will be one trade within that. So yeah, entering this trade, the next candle open and putting my stop loss there. And with the 10 AM open, we have expanded higher. And we have almost hit our stop loss. Like this is now a bearish change instead of delivery, but let's see. Consolidation. Now the 10:30 is opening. And now this is a continuation signature. We had a consolidation. We have an SMT divergence right here with the ES. And we have a continuation order block. So this is now a continuation signature, and you have saw it for yourself. Anything can happen in the market. Like it went to my stop loss with a 1 tick or something, and it expanded again. Now we have a continuation order block, so I can trade my stop loss to that low, and I can de-risk myself. And we will see what happens next. And the price expanded higher, completing our 2R objective. So this was the first trade. Now we will go into the next newer session again. So starting with the daily chart, what do we have? We have taken the previous day high, which is the lower probability signature, for a continuation, because in order for the open low high close, we need open, then low of the candle within the 50% of the previous candle range, then high, and then close. So in this case, we have taken the previous day high first, which is lower probability, but we will see that on lower time frames. If we drop down to the 4 hour, what do we have here? We are inside of a consolidation range. If we go to the 1 hour, we are still inside of a consolidation range. Bringing up the daily indicators, we have created the high of the day first, and now we are going lower. On the 8:30, we had some sort of news, and this is NFP week because start of the month. We manipulated the current day low, and now we are kind of giving a bearish reaction. So my initial bias is bullish, and we will see what the 9:30 is doing. So skipping it into the 9:30 open. So the 9:30 is kind of closing above the down close candle, which is a good continuation signature. Do we have any SMT at the lows? We don't have. If you go to the 5-minute and bring the hourly indicators, we have a change in state of delivery very late due to that news. I can enter within the 9am candle, but I'm always trading post 9:30, so we will see if it provides us any continuation entries. And I don't think so. Do we have some news on 10am or something? So this is 4th of June. Yes, we do have a 10am news on 4th June. So you'll see if it's providing a bullish entry again or something, because we are going lower very aggressively. And we are kind of invalidating the bias. This is kind of a seek and destroy, like taking the high of the day first, then going lower, going higher again. Bringing the daily indicators. So now if we are creating true low of the day now, then the price might reverse up at this point, because we have SMT divergence with the ES, and if we are closing bullishly within this candle, we can trade it to the previous day high or just 2R, because it's kind of a seek and destroy and lower probability day. So waiting for this candle close, or waiting for 11am or 10:30. And these are the cases when you have to use the candle 3 as an entry, because we are creating large wicks which doesn't support expansion. So now we have the 10:30 open, and if we assess it back and we are kind of going higher, the ES is stronger, NQ is weaker. Going to the 3-minute chart and bringing the indicators on. So now we have the 3-minute indicators on the right side. Do we have a change in the state of delivery? We don't have that yet. So for the 10:30, we need some kind of low up the candle to be put in, because the first half of the 10 a.m. candle created that logic. Now we need to see an expansion candle, so we need a small wick, an order block, and then expansion higher. I cannot trust this order block because we have failure swing at the lows, so we will see what happens. And now we are tagging a fair value cap with an ES. And for the continuation order block, we need a closure above this. And now we have created kind of a small wick inside of 50% of the previous candle. And we have closed above these two down close candles, taking the short-term low, and also creating SMT divergence with the ES at that low. So this is now a high probability signature. Have we closed yet? Nope. And now we have closed above those down close candles. Going back to a 30-minute, small wick supports expansion. Closure above, yes, we have. And we are gonna trust this entry. So entering in the next candle, putting my stop loss below this low, which is around 20 points, and targeting strictly 2R because this is lower probability day. So entering here with $200 risk, which is around 5 contracts, $210. Putting our stop loss below the 50% of the wick. Now we are above the previous candle high. If we see some kind of reaction, then we can try our stop loss to break even. And we have hit our objective. So reviewing this trade again, we had a seek and destroy kind of condition on the daily chart. We had a bullish bias. We closed above the previous day high, so we were aiming for the previous day high and this high again. When we went into the 1-hour chart, we kind of created the high of the day first with the 8am news. Then we 9:30 did nothing. The 10am news like manipulated this low again with an SMT divergence, which is a true confirmation for reversal. And then we traded we divided that one 10M candle by 2, which gives us a 10M and 1030 candle. And now we had a reversal within the 1030, and we traded the continuation after the 1030 candle with this continuation order block, taking the short-term low followed by lower above, which was a valid order block, and we traded it higher for a 2-hour target. So this was the trade. Now we will move into the next day. So moving into the next day's New Year session, what do we have here? We are reacting up the previous relevant swing. Is it an all-time high? Nope. So yeah, we are reacting above this high, which is giving us that bearish daily profile open high locals. If it is a valid reversal on the hourly time frame, then we can see continuation lower to the previous low or this fair value gap on the daily chart. So dropping down to the 4-hour, we have a 6 a.m. reversal from the 18 open. We expanded higher, expanding back lower. The 8:30, 5th of June, what news do we have? 5th of June, we have a day prior to the NFP, so ADP, non-farm employment change or something. So do we have a candle 2 closure now? Nope, we don't have. So waiting for the equities open to give us that narrative if it is going higher or giving us an entry to the downside. And bringing the daily indicators on. We also kind of have created the low of the day, but we have failure swing at this low, so we cannot trade away from this. Do we have SMT on the yes? We still have like this low resting below, so we cannot trust this. Although we have a tiny SMT with the yes, but these are all failure swing. If you go to the 4-hour, bunch of failure swing to the downside, no fair value gap to trade away from. So we will see what the 930 do. So 930 open. Going to the 30-minute chart, we are kind of creating the candle 2 of the swing point now. The ES is a bit weaker because it's creating a short wick above the previous candle high, and the ES is kind of creating a large wick. So let's see what does this candle give us. So bringing 3-minute indicators. What do we have? A small wick, a change in the state of delivery. This is our objective, that failure swing. Right there, we have a change in the state of delivery on the ES and NQ. And what Tron liquidity do we have on the yes? So this is that Tron liquidity. We can trade towards that relevant swing within the market. So now we are too near to the Tron liquidity. I can expect an entry, but we will see what happens if we get an entry on the yes or NQ. So skipping it by one candle. Now we are kind of reacting up the previous candle low, which is not good for a continuation. But let's see what happens. Now we have kind of a continuation signature, equal lows right there, and that low below that. And now we have tapped into this tiny fair value gap right there. And we closed above this up close candle, which is that continuation order block. If we go to the 1-minute chart, it will be more cleaner. Move up, move lower. So now we can seek a continuation entry within the next candle, putting our stop loss above this high and targeting strictly 2.12 or something. And let's see what happens. So entering here with 10 contracts, which is around 212 point stop loss, and holy shit, we expanded within only one candle above that order block. So let's review this trade again. We had a bearish bias. We reached this high on the daily chart. The daily candle has a large wick, but our targets were also small. If we bring up the daily candles, What do we have from the daily open? Creating the high of the day from that 8 a.m. news manipulation, and then targeting the current day lows again. Are this relevant low on the yes? So if we drop down to the 30-minute, we have a candle 2 closer on the 9:30, but we traded within the candle 2 continuation order block. If I go to the 3-minute chart and bring the 3-minute indicator, what do we have? A small wick supporting expansion, going lower, then slight retracement into a fair value gap, followed by closure below that continuation order block and entering within the last stage distribution. So this was the next trade. Now we will move into the next day. So here we are on the daily chart again. And what do we have here? So skipping it, have we skipped it to the next day's newer session? So that previous day kind of reversed up the lows, up the highs, and we had a bearish price, but this is NFE Friday 6th of June. We have none from Ferro, so yeah, we kind of expanded higher, which is unexpected because we don't really have a daily wick. We have SMT at the previous day low with the ES, and if you go to the forward chart, we're kind of expanding away from the daily open. So yeah, can we trade it to the highs again with the 930? Certainly, because you're expanding higher. 8 a.m. candle expanded higher. If the 9 a.m. candle is providing us some kind of retracement entry, then we can trade the continuation higher, and we will see that. So skipping it to the New York Open. Now this is the 930 kind of a retracement. We will go to 30-minute chart. Now it is expanding higher. We have a candle 2 at 7 a.m., candle 3 at 8 a.m., and candle 4 at 9 a.m. That can be traded as an expansion higher if we get some. So this is the 935, bringing the hourly candle on the right side. So what do we have here? With the 930, we retrace into this fair value gap, and we close above that. Same thing for the ESE, is a bit stronger compared to the NQ because it is like going higher above the highs, above the previous day high. It is near the drawn liquidity. So let's see if we can seek a continuation entry. If the ES is reversing up that high, then our price will be invalidated, and if it is consolidating at that high, that means a continuation signature. Then we can trade the NQ, which is the weaker asset in this case, to that high. So we will see that now the ES reached that high. Can we get a continuation order block? Consolidation at that high, which is a continuation signature. Now a deep retracement, which we don't want to see. And now we kind of have that SMT divergence with the yes at that low and at this low. We are taking that, so we can trade a retracement into continuation again. Do we have a change in the state of delivery? This is 10:45. We have a change in the state of delivery yet to close, and we kind of fill our swing on the highs. So let's see if it's closes above. Can we enter this candle? This would be 60 points stop loss, so we will wait for the continuation or block within the 11 a.m. candle or something. And let's see. Now we have closed above the down close candle. Let this candle print. And there is something I want to share with you. This candle is kind of reacting up that previous candle high, and we know that the market reverses with a swing point. So if it is printing another bullish candle above that, then I'm gonna take my entry or taking the continuation order block. And if it is reversing lower, because the only place the market to reverse is this candle high and creating a swing point there. So we will wait for that to happen. Although we have a closure above, but we are reacting above the previous candle high, and I missed the initial entry, so we would wait another candle. And there you go. So the market created a swing point there and it reversed up that previous candle high. We do have a continuation order block, but we also have a reaction at the previous candle high. If it is closing above with a body, then we can trade continuation higher, but it rejected above that, creating SMT divergence with the yes. So our bullish bias is now invalidated, and now we can skip into the next newer session. And what do we have on the daily chart? We still have a bullish bias. This is the Monday, 9th of June, and we are closing above this down close candle, a continuation signature, previous day high on the ESN and Q as a drawn liquidity. If you go to the 4-hour chart, 1822 candle reversal from a fair value gap and expansion higher. So bringing the daily indicators on. What do we have? We have a change in the state of delivery in the Asian session. So intraday low of that is formed within the Asian session, and now we can see continuation within the New York. If the 930 is providing us some kind of retracement, then we can trade it higher. So skipping it into the 930 open. So now we are at the 930 open. We are kind of going lower. So we need kind of a rejection of these lows if we are invalidating this bias and going for the previous level, then that would be something I don't want. 945, so we will wait for this candle to print. And we will drop down to the 3-minute chart, bringing 30-minute candles or the 5-minute. So we have inverts this fair value gap, which is the first signature of a reversal. And can we seek a continuation entry? 10 a.m. open is in within 30 minutes, 10 minutes. We need a close above this down close candle. And now we have closed above. If I'm entering here, stop loss will be like 60 points. So I would wait for continuation order block. Now we have retraced. And we have closed above the down close candle, kind of creating an SMT divergence. Yes, creating SMT divergence at this flow. And ES is taking that, and NQ is creating an SMT divergence. So I'm gonna enter the next candle, putting my stop loss below the body and targeting 2R, which is slightly above the target, but that's okay. So entering at the close, and with a 4 contracts, we have a risk of 276. With a 3 contracts, we have 207 risk. So I'm risking $200 for $415. And let's see what happens. If now this is an important lesson, if the price is rejecting above this high sharply, then I can close my position or put my stop loss to break even, because the market is not reversing with a hope, it is reversing with a swing point. So I will not hope for expansion higher. I can put my stop loss to break even, and yeah, there we have hit our objective, which was that previous day high. So now what was our bias? We had a bullish bias for the previous day high. On the hourly chart, we had a reversal within the Asian session from the manipulation of this low and hourly gap, and we have a swing point on the 9 a.m. and we traded the 10 a.m. as a continuation higher. The change in state of delivery was confirmed within this, and we traded the continuation higher. This is also a similar entry I took this week, which I will show you in the trade breakdown. So this was the next trade. Now we will go into the next day's newer session again, and starting with the daily chart. So now what do we have? We are kind of having a messy chart. We have rejected above that high, and we have created like a open high low close candle or something. We'll confirm that on the hourly. So the 18 open traded into that high. Now we are kind of reversing lower. And if we go to the 1 hour chart and bring up the daily indicator, what do we have here? We have reversal within the Asia, closing below the consecutive series of closed candles. And we have taken this low, but we still have a failure swing like yesterday. And then we can trade it lower. So for the 930, we want to see some kind of swing high to be put in, so we can trade the continuation lower to the London lows or this low below the London low. So this is our idea because the daily candle has an open high, low close. So skipping it into the new session open, we are at the 930. Let's see what happens. We are kind of printing a bullish candle, which is not okay for expansion lower. So we need some kind of a rejection within the candle 2. This is now 952. We are still printing bullish candles. Now the 10 a.m. is within 3 minutes, so we will wait for the 10 a.m. And now we have a candle 2 color kind of conflicting because it is also taking the previous candle low and the previous candle high. But we will see that on a lower time frame. So dropping down to the 1 hour and bringing the hourly candles. And what do we have? Consolidation, not valid. Still consolidation. So ideally for the 10 a.m. candle, we need to take this high and then go lower, which will be the ideal situation. And now there was some random line. So now what do we have? A consolidation. So ideally we want to see a reversal at these highs. If we are reversing after 11:30 or 11 a.m., that would be very late into the day. So we need that reversal now within the 10 a.m. or the start of the 11 a.m. candle to then trade it lower. So we have a candle 2 closer, and the ES is taking the previous candle high. If the NQ isn't reaching there, that would be an SMT divergence. Now 10:56, 11 candle, 11 a.m. is opening within 1 minute. And now we have some structure to work with. We have taken the previous candle high on the ES, and we are creating an SMT divergence with the NQ, and we have a change in the state of delivery within the candle 2. So ideally we want to see an open low. So ideally we want to see an open high low close candle. So for the 11 a.m. we want to see a small wick to be created with a posing run, then followed by a closure below to then trade that continuation order block. So now skipping it by 1 minute. Do we have a closure yet? Nope. Now we do have a closure with SMT divergence at this high and taking this short-term high, closing below the consecutive series of closed candles. So the price is consolidating, but we still have a mechanical continuation signature, so I can't deny it. So I'm gonna enter it in this candle, putting my stop loss above 20 points and targeting like 2 hour or something. So entering there, and with a risk of 4 contracts, which is 5 contracts would be 210. Yeah, setting 500s. And holy cow, we expanded within only one 5-minute candle and completed our objective. So this was a trade. We were expecting a bearish bias because we reached a relevant high on the daily chart. Then we had a bearish daily profile. Within the Asian session, we created the high of the day. With the change in straight up delivery, then we had a retracement. On the ES, we have taken the 9M high, and in Q, we are creating SMT divergence. So that was our candle 2 of the swing point. Then we waited for that order block, then continuation order block within the 11M candle. And then we traded the 2-hour entry to the lows. So this was the trade. Now we will go into the next day's newer session. So starting with the daily chart, what do we have? We are kind of retracing lower to the 50% of the previous day's range. We haven't taken the previous day high, so we can expect still a bullish bias higher. So that's the idea. This is Wednesday, 11th of June. Skipping it into the newer session. So now what do we have? Bringing the daily indicators on the right side. We have created the blow up the day from some kind of manipulation. We still have fair swings to the downside, but we have a change in the state of delivery. And the news are also expanding higher above the highs. And we are above the previous day high. How much of ADR we have? 227 points, and the average is 400, 260, and 430. So we can still expect some expansion higher. We are above the highs. If the 930 is providing us some kind of retracement into expansion, then we can get inside with that. So skipping it into the 930 open. So now we are at 945. Now we are at 950. The price is kind of reversing without taking the previous candle high, and we don't have a signature to work with. Can we still expect a continuation higher? Yes, we can. So waiting for the 10M open. Now the 10M candle has opened. We have price retracing into a fair value gap, and we don't have that candle to color yet. If we go to the 5-minute chart, if we bring the hourly candles, the 7M acted as a candle 2, the 8M acted as a candle 3, and the 9M acted as a candle 4. So we cannot trade the candle 5 expansion higher, but we can like see it on the 5-minute time frame what happens. So now the 10M open. If the 10M is truly expanding, we want to see a low of the 10M created and then expansion higher. Now we have created the high at the low of the 10M candle. And if you're entering 60 points around, if we see some kind of continuation order block, we can trade it because we are retracing into fair value gap. And this is not quite a candle 2 color, but it still is kind of a reversal. So we can trade that higher. So waiting for the continuation order block. Do we have one? Dropping to the 30-minute chart, bringing a 3-minute indicator. So this is now the 10:30 open. We have created a slope from an order block. Can we enter here? putting our stop loss here and targeting that high. So the idea is that we don't have a reversal candle and we are like in a candle fifth of the hourly candle, but we still have that retracement signature and order block on a 30-minute chart. So we are gonna try that. So entering, so I'm gonna enter this candle, which will be like 8 contract risk, 170, 9 contracts, 191, which is okay. So I'm gonna enter here, targeting strictly 2R because we have expanded too much and the structure isn't too good. So we are gonna try that. Now we have like 30 minutes spent in a consolidation, which is not a good signature because an expansion, we want to see expansion within 30 minutes or within the first half of the candle, and we consolidate this candle. 30-minute chart, you can see that. This is kind of a not a weighted signature. And there we go. We stopped out of the trade because the price was spending too much time there, and yeah, that happens. So this was the loss. Now we will go into the next day's newer session and let's review that trade. The attempt candle expanded higher. The 930 kind of retraced, and then we traded that retracement into expansion, but I think we entered a bit late, like somewhat in there. We should have entered like within this candle, but we don't have that reversal signature or with a structure, and this order block is kind of saggy. We do have an SMT divergence, so the best entry would be here because we have a change in the state of delivery, a continuation order block, and then targeting, which wasn't a 2R. And if we try it on the NQ, which was also not a 2R trade, so that was the loss, which was one loss out of the series. Now we will skip into the next day's newer session. And starting with the daily chart again. What do we have here? We have very conflicting bias. Since we have like taken the previous day high and we have reverse lower, and Monday, Tuesday expansion, midweek reversal, and yeah, we have a midweek reversal profile, but on the Thursday we are also creating SMT divergence at this low. So skipping it into the daily chart. If we are manipulating the highs again, then we can seek entry lower because we don't have kind of established high of the day. And if we are holding this SMT divergence, we also have SMT at this low, then we can trade it higher. So this is kind of a conflicting bias because we have a reversal at the previous day with an intra-week change in the state of delivery right there. But in this day, we are going higher instead of going lower, open, low, high close. So this daily profile is supporting a bullish idea. If the 930 is manipulating up these highs, then we can trade it lower. So skipping it into the equities open. It's 930. Expanding higher, rejecting them of this high, but leaving this is a feather swing. So now we have a candle 1, a candle 2 8 a.m., candle 3 9 a.m. Can we seek a continuation entry higher? So if we can get an entry to this high, we can take it. And the ES kind of is a lagging asset. We can also use that for a drawn liquidity. Dropping down to the 5-minute, bringing the 1-hour candles on the right side. This is the 10 a.m. open. We need kind of 10 a.m. low to be created from a wick and a opposing run, and then trade it higher. skipping it to the 10 a.m. open. Now what do we have here? We have expansion above the order block, but we have very less room to return on liquidity. Here we can do two things. Putting our entry here, stop loss below the low because we've expanded too much from order block, targeting 2R. And then when we are going above this high, we can trade our stop loss to break even because we don't know if the price is reversing it that high, continuing it that high or something. So we will act to that accordingly. Let's check the ADR. So the average daily range, we have 106 points. Previous day was 300 points. So we still have a room in a daily candle to expand higher. So we will give it a shot. So entering next candles open, putting our stop loss about 8 points and targeting strictly 2R. Entering with a 5 contracts. So now if we are going above the high, if we are showing rejection, then I can either close my position or trade my stop loss to break even because I will not operate out of hope. And the market is operating with a swing point reversal, this is a price delivery. So I'm gonna take that in mind. So skipping it by one candle. Now let's see. So the candle has closed above that high. Now we have less chances of a reversal. We can expect continuation. If it is showing some kind of rejection, then I can try my stop loss to break even. And we have created kind of continuation order block on a 3-minute, but we won't try our stop loss yet. And we have hit our objective. So this was the next trade. So now reviewing it again, we had a bearish bias because the previous day reversed, but we created SMT divergence at the Monday lows with the NQ with the ES, and we have a daily profile supporting our idea. Early New York reversal with the 8 a.m. candle, then equities open in 10 a.m. continuation higher, and we traded above the high because the ADR was supporting the idea, the average daily range. So that was the trade. Now we will skip into the next day's New York session again. Skipping into the next day, the Friday kind of has a strange expansion lower. What news do we have? Friday, 13th of June. We have a 10 a.m. news, but the price expanded too much prior to the session. If we go to the hourly chart, bring the hourly indicators. From the daily open, we have expanded too much lower without creating an established low. And we have manipulated most of these lows. Then we can expect a bullish bias because we have already started rejecting higher. So waiting for the equities open. 935 expanding higher. Daily candle has created a very large wick, almost consuming like 480 points. So that is not ideal for a expansion lower or something. So we are gonna trade back into the 50% of the range. Can we seek a entry to the highs? So we will see that. So skipping it by one candle. We have a candle 2 color on the hourly, and yeah, 946. So skipping it into the 9 a.m. reversal. Now let's see if you can seek a 3-minute continuation entry or something, or we would wait for the 10 a.m. open. We have a change in the state of delivery. We need a continuation order block. Now 953 consolidation. 10 a.m. is opened. And we are having SMT divergence. We have a candle 2 color on the yes. which is a weaker asset in this case. Can we get a continuation lower? So bringing the hourly candles. So this kind of a day that you don't have a bias because price expanded prematurely and you have to rely on the daily profile and the equities open. So the equities open short rejection lower, the 10M is going to expand lower or something. So some dropping down to the 5-minute chart. In these cases, you have to really rely on the swing points. Now, what do we have? A change in the state of delivery is not yet covered, so we need that to happen to then trade continuation lower. The price is just consolidating because we have a large range Friday prior to the new session, so we will skip it into the next day's new session again. And starting with the daily chart, what do we have here? On the Monday, we expanded higher away from, like, let's see. So basically we closed here. This candle is showing that we opened up, then we had a continuation order block, change in state of delivery. And the open is right here, and the indicator is showing it up above due to the settlement or something. We are near this daily drawn liquidity, which we have taken the ES. Can we trade the NQ towards that? So we will see if the 930 provide us any entry. So skipping it into the equities open. Dropping to a 30-minute. So the equities open is expanding toward that high, which is not providing us that retracement signature. We do have a retracement, but it also started expanding within the same candle, not providing us a continuation order block. So let's see. Now we have taken that high. Can we seek a continuation entry above it? If price is giving us continuation signature, then we will take it. So 936, dropping to the 3-minute chart and bringing the 3-minute indicator on the right side. Now we do have some kind of continuation signature with an SMT divergence, the previous candle slow. We are above the highs. The average daily range is too far, which is not ideal for longing, but we can like give it a shot. Like the previous day expanded too much. The current day has like a 336 points average daily range. We are above the highs, but we haven't showed rejection yet, and we can expect a continuation higher. This candle is also supporting expansion, so we have a down close candle into an SMT divergence, followed by closure above, which is that order block. So I'm entering in the next candle, putting my stop loss below this, 36 points, and targeting 2R. And at the 10 a.m. open, if I see some kind of reaction, because the 10 a.m. is the last time for the daily reversal. So if we see some kind of reversal lower, we can put our stop loss to break even. So I'm entering here with a 4 contracts or 3. So I'm gonna try 4 contracts because we are like $600 away from passing the account. So I'm gonna risk on it. So I'm gonna risk a little bit more and see if it is giving us something. So now this is the 10 a.m. open. I can put my stop loss to break even. And there we go. We have hit our objective. So I put my stop loss to break even, not out of fear, but because of the logic. Because I've showed you in the previous example, but on the 10 a.m., the only place we can reverse up is the previous candle high or something. That would be if we are showing some kind of projection, that would be the start of the retracement, reversal, or another failure price delivery. So if we are rejecting up the previous day, if we are rejecting up the previous candle high, that is a red flag in a continuation, and you can put your stop loss to break even or something. And now we have hit our $3,000 profit objective for the evaluation account. And now I will show you the stats of this backtesting. So here are the backtesting stats. We have passed the account. We have met $3,075, which is above the threshold. And if we measure our consistency, our traders are looking the same. We have a 626 win, which is also coming under the 50% consistency rule. If you're aiming for the same risk and same reward, and this will be the summary. So now this is the average win loss trade, which is for measuring your risk to reward. So my average win is 467 and my average loss is 191, which is greater than 2. This is an indication that you are letting your winner runs and you are cutting your loser shorts. And we have a day win of 87%, a win rate up 87.5%, which in normal evaluation I'm having 75 to 80%. We have a steady rising equity curves, which doesn't account for emotions. If you are emotionally trading or revenge trading, that will look like a rigged equity curve. So this was the backtesting session, and I use all the prop firm rules. I started with $2,000, and that is the net PNL, and we have hit our objective within the prop firm parameters. So this is it for this video. Hope you guys have learned something from it. Thank you guys for watching. Make sure to subscribe to the channel and like the video. And if you want more videos like this in future, let me know in the comment section and I will make them. And see you next week.